Hi, everyone. This is Sam Silverman, Managing Partner of EB5AN. Thank you for taking time to join us on today's webinar. Today, we're going to be discussing the importance of working with a reputable escrow bank with ICS. Many of you probably don't know what ICS is, but we'll get into that during today's webinar, and I promise it'll be worth your time to listen. All right, here's a quick overview of what we're going to cover today. First, we'll chat a little bit about EB5AN and the EB5 visa program. We'll introduce our guest panelist, Dan Topple, top executive at Customers Bank. We'll discuss what is an escrow account and why it matters, why it's important for EB5 investors and projects. And we'll get specific and talk about why ICS is an important feature for any EB5 escrow account. And then we'll wrap up and chat a little bit about available rural and urban EB5 projects. So a little bit about EB5AN. We're a national EB5 investment fund manager. We work with investors from around the world. We've worked with over 2,000 investors from more than 60 countries. Our regional centers cover the entire continental United States, and we've been in this space for about 11 years so far. One of the things that makes us a little bit unique from our competitors is that we're 100% committed to investment transparency. So providing all of the key documents related to an investment, financial statements, sales reports, details. We believe the investors deserve having the most current, up-to-date financial information available to them before making an investment decision. And this also includes the escrow agreement as well with Customers Bank. One of the other things we're known for is providing a lot of helpful diligence articles and materials. On our website and our blog, eb5investments.com, you'll see hundreds of articles helping investors identify questions to ask, as well as over 500 videos on our YouTube channel covering many common immigration and investment topics as well. As I mentioned earlier, I'm Sam Silverman, one of the two managing partners of EB5AN. My background and bio is there on the left side, and my partner Mike Schoenfeld there on the right. You can learn a little bit more about him there. Our regional centers cover the entire continental United States, which gives us great flexibility in seeking out the most compelling EB5 investment projects in both rural and urban TEA areas. We're not restricted at all geographically, so we can look around the country and find the most compelling projects from both an immigration and financial risk perspective. Our investors are very international. We have investors from more than 60 different countries and regions around the world. What's most relevant here is that people of many nationalities and backgrounds have consistently found value in our investment approach to the EB5 visa program. And we've been fortunate enough over the years to be referenced and have our projects referenced and quoted in a number of the leading publications in the United States and around the world. And now I'm pleased to introduce Dan Topple with Customers Bank. Dan has been in the EB5 banking industry for many, many years. We've had the opportunity to work with him for almost a decade now. And I will let him jump in and share a little bit about his background, experience, and then we'll get into Customers Bank and talk about what escrow is and why does it matter for EB5 investors today.
Great. Well, Sam, thank you for including me on this webinar. It's a pleasure to be here. So again, Dan Topple, I'm a Senior Vice President with Customers Bank here in New York. I've been in the banking world for well over 20 years at this point, with a focus on more of these outside-the-box industries, with a specific focus on EB5 for the last 8 to 10 years. I've worked at a number of institutions, both small and large, but I've been with Customers Bank now for about 7 years. So a little background about Customers Bank. We are a New York Stock Exchange traded public financial institution, about 22 billion in assets, about 17 billion of which are deposits. We've been involved in the EB5 industry as an institution since 2015. acting as escrow agent for dozens of projects, accounting for raises well over $3 billion at this point. We have a full service team here at Customers that's fully devoted to EB5. There are 8 of us where our day-to-day is on the EB5 program, where we are not only the banking partner to the projects, but we also act in the capacity of escrow agent to, again, dozens of active and previous EB5 raises. Customers Bank is a fully FDIC insured institution. As an FDIC insured institution, that means we actually provide insurance coverage that's provided through the FDIC, which is a US government instituted program that provides coverage for up to $250,000 of insurance. So what is meant by that is that if a bank were to fail, that depositors' deposits at the bank are covered up to $250,000. Anything above and beyond that in a more traditional setting is not covered and could be ultimately a loss to the depositor, which is why we provide something called ICS, Insured Cash Sweep, which allows for additional FDIC coverage. Now, what I'll do here, I'll get into a little bit about what FDIC coverage is and why that was created in the first place. So in the Great Depression, about a third of all banks in the United States failed. So this is going back to the early 1930s. So the US federal government created a program called FDIC, which provided insurance coverage for depositors in US banks to give them a sense of security that if they put money in US banks, that their money is safe. It was a much lower limit at the time because it was the 1930s, but as time went on, the allowance for insurance coverage on FDIC insured deposits grew to the point where it is today of $250,000. As time went on, it really was shown that $250,000 really wasn't enough, not only for individual depositors, but really for institutions as well. So organizations created programs like ICS, Insured Cash Sweep. So what ICS is a program that ultimately covers up to $100 million in deposits for any one depositor. So what's meant by that is that if you had a relationship with us where you had, let's say, 75 million in deposits, we would work with partner banks. We partner with about 3,000 different US-based banks that are also FDIC insured, where we space out those deposits to ensure that no one institution holds more than 250,000 of your deposit. So what happens there is that ultimately when you need to take the money out, we just pull the money out of ICS and then we just give that out to you. So it's fully liquid money, it's easily accessible, and again, it just provides for additional FDIC coverage. As an institution, we have about 77% of our total deposits are FDIC insured as a result of not only having smaller deposits to cover that 250, but for those larger deposits, we do offer this ICS coverage. So it's 77% out of about 17 to 18 billion in current deposits right now, which is actually a very large number when compared to our peers. I'm going to pivot now. Right. Okay, perfect. I'm sorry.
No, thank you, Dan. We're gonna get into more detail about ICS and how it mechanically works a little bit later. But I think before we do that and get a little more complicated, let's zoom out a little bit and just talk about what is escrow, and keeping in mind, that a lot of our investors are not very familiar with the United States and investments in the US, and a lot of times an EB5 investment is one of the largest financial transactions they're going to make. So with that, tell us kind of what is escrow, why is it important, and then how does it kind of fit in with an EB5 investment?
Sure. So escrow is it's a financial arrangement where you have a third party coming in that actually controls the disbursements of capital for two separate parties that are involved in a transaction. So generally speaking, if you have one company buying another company, money is held in escrow. You have a third party that comes in that governs that money until certain triggers have been met to allow the money to go out to finalize the transaction. So in the world of EB5, what happens is EB5 investors send their money into what's called an escrow account. So this escrow account is an account whereby the signatories are what's called an escrow agent. So we as a bank not only hold the escrow account, but we act as the escrow agent where we're governing and essentially controlling the funds so that we're protecting the investor funds to ensure they're not dispersed into the project too early. There are certain triggers per the escrow agreement that need to be met before funds can be released from escrow. We, as the third-party escrow agent, ensure that every dollar that goes in and out of the escrow account follow the rules and the guidance of the escrow agreement itself. So we not only hold those escrow funds, but we act as that escrow agent. And as a publicly traded institution, we have fiduciary responsibility to not only our clients, to not only the investors, but to the general public to ensure that we're meeting the requirements as set forth in the agreement itself.
And how do we make sure that while the money is in that escrow account that it's safe? I mean, this kind of ties back to what we were just talking about, but how do we make sure the money is safe and available once these conditions are met?
Sure. So these funds are held in an entirely liquid deposit account. We refer to it as a demand deposit account, which ultimately means that at the time that funds need to be moved, we are immediately moving them. So the funds are completely liquid. From a protective measure, not only are we a third party where it's our responsibility to keep an eye on these funds, but we actually have this ICS product on our EB5 escrow accounts. So ultimately what that means is that the EB5 investors' funds are protected not only from us keeping an eye on it, but from this FDIC coverage perspective, up to $100 million, right? So all of the funds that sit in EB5 escrow, assuming it stays under $100 million, which for the most part it does, they're fully governed or fully insured by FDIC.
Got it. And we'll chat a little bit more about FDIC a little bit later, but I think that's perfect for now. So now that we have kind of a baseline understanding of what is escrow and why is it important, let's kind of apply that to EB5 specifically. So what are some of these conditions and what are the benefits for investors?
Well, escrow really helps to protect the investor. So if you're an investor and you're investing in a project where there's no escrow, you don't have all these safeguards, all these protective measures in there to ensure that your funds are following the appropriate steps along the way. So having escrow in place really allows us as the escrow agent and requires us as the escrow agent to ensure that certain provisions are met, certain milestones are met before the funds are released. So we need to be sure that the regional center has applied for approval from USCIS. We need to be sure that the offering has applied for approval with USCIS filed by the regional center. We need to be sure that the investor has quote unquote fully subscribed. So what I mean by that is that funds are not being dispersed by for the benefit of the investor until the investor's full amount of investment proceeds have been deposited into escrow, or if there's some side agreement dictating that lesser funds can be dispersed. We also need to be sure that an investor's application, their I-526E petition, has been submitted and filed with USCIS. So you have all these protective measures in there to ensure that the project is either approved or on its way to being approved. The regional center is in the status of also either being approved or has already been approved. We need to be sure that USCIS received the application for the investor because we're not going to release funds without knowing that the investor has already committed to being a part of the program itself and an investor into the project. There are certain triggers that certainly need to be met. We want to be sure that the investor has the confidence that by putting money into escrow, that their funds aren't just going to be immediately dispersed into the project. The investor needs to be confident, needs to be sure that before the funds are being dispersed, that the project is doing what it's supposed to do, that the regional center is doing what it's supposed to do, and that we as the escrow agent are keeping an eye on these funds to ensure that all of these triggers are being met before funds are being released.
Got it. Okay. And so from the investor's perspective, what is the cost? right? Obviously, you guys aren't working for free. So what is the cost to them, and how does Customers Bank, at the end of the day, make money from providing this service?
So there is no cost to the investor themselves. We as a bank are full believers in the EB-5 program. We understand the importance of it. We understand that it's not the easiest process in the world for the investor. So we kind of remain behind the scenes just to ensure the safety and security of the process itself for the investor. So there's no cost from our perspective. The way the bank makes money, to give you a little behind the scenes on the banking industry, we make money from just funds sitting in deposit, right? So we're not out there looking to nickel and dime our investors. We're not out there looking to nickel and dime the projects with which we work. At the end of the day, funds that come into banks are ultimately being lent out to borrowers in different, for different clients, for different projects. So at the end of the day, the bank makes its money from that spread, which is referred to NIM, net interest margin, between what we pay for the deposits and what we're earning behind the scenes in interest for the money we're lending out. So again, at the end of the day, there's no fee to the investor. We're just here to be another supportive measure and to ensure that their process, their immigration process, is as smooth as possible.
Got it. So from the investor's perspective, this is really a win-win. There's no additional cost, and the funds are backed by the U.S. government up to the entire amount with the ICS program in place. And there's also the additional benefit of having a third party, in this case, Customers Bank, making sure that these release conditions, the petition's been filed, the application's been submitted, making sure that all of these things have been done before funds can move. So it really is a best practice for projects to have escrow today. We rarely see projects that don't have escrow. There's really no negative for investors to have it. So if you don't see a project with escrow, that usually means there's something not good, probably, that could happen because you don't have these protections in place. And it's definitely not a mainstream operator, who has a project like that.
And to that point, Sam, we've been involved, as I mentioned earlier, in the industry for a number of years, and we understand the program. We believe in the program, and we're in a position where we've really built a strong reputation for ourselves as one of the go-to banking partners for the EB-5 industry. So from our perspective, we really do due diligence on the projects themselves. So we're not just banking every EB-5 project that's out there. We dig into the projects themselves. We do our own due diligence to ensure that all the associated parties are above board, I guess, for lack of a better term. We ensure that the project makes sense, right? If it's a development of, a single family housing development, is the scheduled timeline, 3 to 4 years, which would make sense, or is it, 3 to 6 months, which doesn't make sense, right? So we're almost that first line of defense to ensure that the project does make sense and is a viable EB-5 project. So working with partners like you, that just shows I guess the reputation that we have in the space of being one of the top partners, of understanding the industry, of ensuring that our clients that work in the EB-5 space are the best of the best.
Got it. That makes sense. And just given your platform and scope, that fits together well. All right. So we did talk a bit about FDIC and ICS earlier, but let's dig into the details just to really understand exactly how this works and why it really is a major benefit for investors and a feature of projects that investors should be asking about.
Great. So again, going back to the insured cash sweep, the insured cash sweep vehicle is something that allows for FDIC insurance coverage above and beyond the standard $250,000. So again, FDIC was created in the 1930s after the financial crisis here in the US, where a third of all US-based banks failed. So this was a government-created program that really was built to reinstill confidence in the US banking industry for American citizens. So what happened was they created this insurance coverage that said, if you hold money with US banks that have FDIC coverage, you're insured up to a certain amount. So should that bank fail, your money's safe. You'll get that money back. Throughout the years, FDIC coverage increased to the point where we are today, where it's $250,000 per depositor per institution. Now that's great, but at the end of the day, that only gives you coverage up to $250,000. So if you look at it from an EB5 perspective, if I'm an EB5 investor sending $800,000 into an escrow account, well, okay, at most only $250,000 of that is insured. And that's assuming I'm the only investor or the first investor. So if you have a project where, let's say you have 5 EB5 investors, there's $4 million sitting in escrow, traditionally only $250,000 of that would be insured. So what ICS does, it's a program that allows for FDIC coverage up to $100 million. So what happens behind the scenes is that we work with partner banks. There are over 3,000 banks in this ICS network, where we deposit $250,000 at each of these other banks on behalf of our depositors. So to this example, if there's $4 million sitting in escrow account, we keep $250,000 on the books here, and the remaining $3,750,000 are spread between our partner banks. This is a manual process for us behind the scenes, where we actually are watching these funds to ensure that the partner banks in the program are, as they say they are. There are no issues with these banks. And if there ultimately is an issue with the bank, what we're doing behind the scenes is we pull from that partner bank and move to another partner bank. So we ensure that the funds are covered not only by FDIC insured banks, but by strong FDIC insured banks. When money is ready to be dispersed out of escrow, it's actually a manual process behind the scenes for us. And the reason why we do that is to ensure there are no hiccups along the way, right? So we, as the escrow agent and the escrow bank, we're doing a lot behind the scenes to help protect the investor. So if we're moving money out of ICS, we want to touch that process to ensure that the funds are flowing as they should. Because if it's not a manual process, you could have issues where too much or too little is drawn out, and that could ultimately negatively affect the investor's process. So what we do is, to this example, if there's $4 million in an escrow account, you have investor A who's moving their $800,000 out of escrow into the account of the limited partnership. We'll manually move their $800,000 out of ICS, back into escrow, and then into the LP account. And this is all a process that happens same business day.
Got it. And you mentioned the LP account. Let's talk a little bit about how money typically moves from escrow. Where does it go from escrow? How does it get into the project typically? What's the path of funds look like? And then how can ICS also be implemented at the partnership level to make sure that the funds are effectively fully secured and insured before they become at risk and invested into the job creating entity?
Sure, glad to do that. So once all the triggers, the milestones have been met to allow for disbursement out of escrow, right? So we have all the evidence of, as mentioned earlier, the regional center, the project, the investor's I-526E petition has been filed with USCIS. Once all those triggers have been met, we then transfer funds out of the escrow account into the account of the limited partnership. The funds will sit in the account of the limited partnership until it's time to be dispersed into what's referred to as the job creating entity, which is the project itself, right? So the funds could sit in the limited partnership for an extended period of time. So what we do is we're not only offering ICS on the escrow account, but we offer it on the limited partnership as well. So from the investor perspective, their funds are insured and protected from the time they hit escrow until the time they're ultimately dispersed out of the limited partnership account into the job creating entity, into the project itself, right? So the funds could be sitting for a few weeks, they could be sitting for a few months, and in that whole time that they're sitting there, the funds are protected by FDIC coverage.
Got it. And let's just talk about FDIC one more time. So
Sure.
FDIC, it's a government insurance program. Has it ever failed, and under what circumstances could it fail, theoretically?
So FDIC has never failed. Again, this was something that was created back in the 1930s. It actually, back in the 1980s, there were a number of banks. There's something here in the US called the savings and loan crisis, where a number of banks failed, and FDIC had to step in and did prevent, let me rephrase that. FDIC had to step in and actually saved the funds of thousands of depositors at these savings and loan institutions. So FDIC has come in handy. Back in early 2023, there was concern with a handful of banks here in the U.S. that they were to fail, and the government and FDIC did step in to ensure that all of the depositors at these institutions would be protected. So FDIC has stepped in a couple of times. What's great is that they kind of remain behind the scenes and just ensure that these banks that are FDIC insured institutions are well protected. And if something does happen, they do step in. Again, FDIC has never failed. This was something that was instituted back in 1933. So we have 91 years of experience with FDIC. And so long as it's an FDIC insured institution, there really are no concerns from a depositor perspective. Again, the only concern is above and beyond $250,000, but that's where ICS steps in to ensure that up to $100 million is insured.
Got it. Okay, that makes sense. So Dan, I know that a lot of our investor clients, as they're working through the source of funds process with their attorneys, they're often bringing funds from out of the United States, and they may not have a bank relationship already, when they're ready to wire funds, let's say from China or Hong Kong or Europe or Latin America. How does Customers Bank work with those investors, who are, taking that first step and investing money in the US and, are going to be, let's say, investing in a project that has an escrow account at Customers Bank? What kind of services does the bank provide and can help with, if an investor needs to get funds into their own account in the US and accumulate them there before wiring funds to the project's escrow account?
Sure, glad to speak about that. So we understand that it's not easy for people outside the US to wire into the United States. So, every country has their own rules and limitations and restrictions. So for those investors that are investing into an EB-5 project for which we're acting as escrow agent, we could actually assist them in opening a personal bank account here in the US. It's not a very difficult process. There is some due diligence we have to do up front where we ask for at least 2 forms of ID. There is some documentation they have to complete, but we will help them to establish this US-based bank account. And this US account can be used not only for the purpose of getting their investment into their escrow account here in the US for the EB-5 project into which they're investing, but they could actually keep that account open to be their personal bank account once they're ready to establish themselves here in the States. On top of that, we could actually be the banking partner to help them with other processes that they might need to follow once they come to the US. So for example, if they needed to purchase a property here in the States, we have a full mortgage division that could help them with the mortgage process. And we actually have the ability or the capability to assist non-US people. So if they're use China as the example, if they're still in China, but they're looking to purchase a property here in the States, and they've already opened that US bank account, we could actually work with them in our mortgage division to help them to get that first mortgage to buy that first property here in the US. So, we're not only the banking partner to the projects themselves, but we could be and offer the ability to be the banking partner to each investor if they want us to be their banking partner.
And for those investors opening up accounts, in the U.S. for the first time, how long does that process typically take, and does that require an investor to come, to New York City to sign paperwork, and or can this be done, online and with an exchange of documents through the internet, or what does that process look like, and how long does it typically take to set up?
Sure. So we understand that it's not easy, it's not necessarily feasible for a foreign investor to come to the US to open an account. So we actually allow this process to move forward via documents shared via the internet. We use a platform called DocuSign, which is essentially us emailing documents. The investor pulls out the email and they're able to sign remotely and get the documents back to us. So we do not require an investor to come to New York to complete the documentation. And the entire process, once they provide us with the necessary documentation or the requested documentation, usually takes no more than 1 to 2 business days. So it's a pretty quick process. It's pretty easy. And again, we understand that the immigration process is not an easy process. So as the bank, we want to be, I guess, the easiest partner to work with. We don't want to be another obstacle in their process of becoming an American green card holder.
Got it. All right, that makes sense. All right, so we'll shift gears for a minute here and chat about a couple of our current rural and urban TEA projects. And just to start, I guess all of these projects have escrow accounts at Customers Bank, and we also have the ICS product set up with all of the accounts, both at the escrow account level and also at the partnership level. And Dan, from your perspective, how long does it take to get all of those accounts set up? I mean, obviously we've already gone through that process, but how difficult is it to set it up? And for future projects that we have, what does that setup process look like?
Sure. So as I mentioned earlier, Sam, we have a rigorous due diligence process that we perform on our end. So we incorporate our legal team, our compliance team, and our team, the EB5 team, where we review the offering documentation for every project that we onboard. So we just want to be sure we understand the project. We want to make sure, as I said earlier, that it makes sense, right? It's a viable project from an EB5 perspective. The timeline makes sense. The amount of money that's going into the project makes sense. The EB5 raise itself makes sense. So we spent a couple of days working with our teams internally to do this due diligence. But I'd say from the time we begin reviewing the project to the time that we have the escrow agreement in place and the accounts open is, generally speaking, I'll call it 3 to 5 business days. It doesn't take a very long time for us to get this established. But once we're introduced to the project itself, behind the scenes, there are a bunch of us that are really digging in to be sure that everything does make sense and that we can get this moving forward as efficiently as possible.
Got it. Okay, and just to provide just a very quick summary, at the moment we have 3 different rural TEA projects. These are projects where they have access to faster priority processing for I-526 green card approval and more visas set aside, 20% reserve visas, which means particularly for investors from higher volume countries like India and China, you're going to get your green card significantly faster in a rural project. Currently, we have 3 different options. One is our Twin Lakes, Georgia project there on the left, large single family home project, well under construction, hundreds of homes already sold, being developed by the Coulter Group, one of the largest private developers in the US with more than 25 years of experience and almost 200 projects and a perfect track record. Kindred Resort at Keystone is a condominium hotel project located at the famous Vail Keystone Mountain in Keystone, Colorado. About 70% of the condominiums are already sold, all the jobs created as well for that one. And then our Walhalla, Utah project is another single family home community with hundreds of jobs created, and both 956F and 526C is already approved. And then for investors who are less sensitive to getting the green card as fast as possible, but are looking for a higher return on their capital and a shorter investment period, we have 2 different urban TEA offerings. They're both the same development, the same building, but 2 different investment options. One is a higher return preferred equity preferred option with a 5% annual return, and then a loan option with a 3+1 year loan term. And again, all 5 of these projects, we have escrow accounts with Customers Bank with the 100% FDIC insurance through ICS on both the escrow accounts and also on the limited partnership accounts where funds are transferred to after they leave escrow and before they're transferred to the job creating enterprise, the actual project entity where they're put at risk and used in the development and job creation in the project. All right, I think that kind of concludes our general webinar for today. I think, Dan, could you just share a couple of concluding thoughts on just kind of why investors should, demand that the projects they consider have escrow, and also just why ICS, is a critical safety feature that investors should be looking for since it's free and it gives them 100% coverage, in the unlikely event of a bank failure in the US.
Sure. And Sam, you used the key word there, it's safety, right? From an investor perspective, they want to ensure that their investment from the time it leaves their account in their home country to the time it actually gets into the project, they want to be sure their money's safe, right? So when you're investing into a project where there's escrow, you have this third party who's overseeing every dollar in and out of that escrow account. So as the escrow agent and the escrow bank, what we're doing is we're keeping an eye on the funds. We're making sure that the investor money is being protected, and we're being sure that the funds are not being released from escrow until they are intended to be released per the agreement, right? And then once funds go out of escrow into the account of the partnership, you have these, the money can still be sitting there for a few weeks, if not a few months. So it's our job as the fiduciary to ensure that these funds are protected. So from the escrow perspective, we're keeping an eye on the funds, but above and beyond that, when you have this additional FDIC coverage, when you have this additional insurance on the funds, as an investor, it gives you that sense of security, that sense of safety that my funds are safe. My funds are being watched not only by a third party who's keeping an eye on the accounts themselves, but by this government-created entity where they're ensuring that if something were to happen with the bank, worst case scenario, their funds are protected and the funds will not be lost. So having not only an escrow partner, but also having this additional FDIC coverage, which again, as you said, is free of charge, it just provides the sense of security, the sense of safety to the investor, knowing that once my funds leave my control as the investor and are going into the project, those funds are protected along the way.
Exactly, and all of those benefits with no cost makes this, a no-brainer for investors to look for projects that have those features.
Yes, definitely.
All right, perfect. Thank you very much, Dan, for taking some time today to join us for the webinar. We appreciate your insights, and for any investors or partners who are watching this, for any questions related to any of the 5 projects that we discussed, please reach out to us. You can use this QR code and schedule a time to chat with our team or send us a message or call. And for any questions related to escrow or for investors who are looking to establish a new bank account in the United States to help facilitate an EB-5 investment and come to the US, please don't hesitate to reach out to Dan. His contact details, email are there on the screen, and he'll be able to help get you in contact with his team to set up a new account remotely.
Yes, and thank you, Sam. And listen, always a pleasure. It's absolutely my pleasure to participate in this webinar, and look forward to assisting your investors and your projects in any way that I can.
Perfect. Thank you, Dan.
Thank you, Sam.